Welcome to the Financially Free Journey podcast, and I am your host, Courtney Dyer. This podcast aims to dispel the seemingly complex topic of personal finances, money management, debt, credit, retirement, and even investing. And in today's episode, we are going to be talking all about investing for beginners. So one of the many reasons why people never start investing is because they don't know how or even where to start. A common misconception is that in order to invest, you need to have tons of money, do hours of mind-numbing research, and then throw your money at a bunch of risky stocks. But none of that's true. And the bottom line is that investing successfully comes down to a few key things. And those are investing as soon as you can, because time is your friend, guys. Educate yourself on the basics of the stock market, seek the advice of a professional, and then diversify your investment holdings in order to reduce risk. So to help me with this important topic today, I have invited one of my dear colleagues, Jonathan Bolt, to join us and to give us some of his words of wisdom and advice when it comes to investing for beginners. How are you doing today, Jonathan?
Doing well, Courtney. How are you?
I'm great, and thank you so much for coming on the show. One thing that I want to start out with is, let's dive into the meat and potatoes here and talk about some basics when it comes to investing. Can you talk to us about the importance of research and how someone would maybe go about researching prior to taking that first step in the stock market?
Yeah, definitely. I think it's important to note to your comment earlier, you don't necessarily need to do a lot of mind-numbing research, but it's also important that you're investing in things that you know and you believe in. There's always there's several different things you could invest in from the stock market perspective: individual stocks, mutual funds, exchange traded funds. But I think it's important, if you're just starting out with investments, to find to go online and find a brokerage firm that has a good research tool available, that you can really narrow down what you're looking for from a risk perspective, as well as different areas within the economy that you'd like to invest in.
Oh, I love that.
A really easy place for a lot of people to start that have never done it, and it adds to the diversification or the component of diversifying your investments, as well as simplifying what you're trying to do and reducing the risk, is looking at mutual funds.
Oh, okay.
And a lot of these brokerage firms have research tools, as I mentioned, that can help you narrow those down so that you can pick the right one. Mutual funds are nice because it basically takes going from investing in one individual stock and diversifying that out over a collection of them. And then it just makes it easier as well moving forward for you to manage it and not be as stressed out that your one particular stock is going to go up or down. Instead, you have a collection of them working for you.
Oh, that's great. That heart attack that you have when you see the huge swings in the market.
Right.
Thanks for sharing those insights, John. And again, just to reiterate, research is an important first step when it comes to investing, regardless of the type of investment you choose to make. And researching the investment is going to give you great insight into past performance and how the investment is projected to perform in the future. So as you just discussed, mutual funds are a great vehicle to start investing, and at a relatively low cost.
Exactly.
Now, as many of our listeners may know, our economy plays a vital role when it comes to the stock market. Can you talk to us about how these economic insights that you have and how they may play into the stock market coming this year in 2020?
Yeah, I'm more than happy to. So a couple of things that we look at when we start predicting or forecasting the economy is we look at a lot of different metrics that can help us get a general idea of where we're headed. Obviously, we're at late stage of our current economic cycle, and economic conditions will continue to slow, but we still see a recession or a major, economic downturn to be unlikely, at least for this year. And for the year 2020, we're forecasting our overall growth for the economy, or our GDP, to be between 1.5 and 2%. And that, coupled with strong corporate earnings, we expect positive market performance in 2020. Now, we did have a great year last year in the market. The overall markets were up approximately 30%. And due to the slowage of the economy and how the last year performed, we're expecting the markets to perform this year anywhere between 4 to 6%.
Oh, that's still pretty good.
Yeah, obviously, it'll vary a little bit from there, but that's, based off of numerical data, that's what we're forecasting.
Now, how does the presidential election impact the stock market?
It's a great question. It's a great question that's hard to answer because
It's a loaded question.
It's one of those answers that you don't really know. For example, we could have where the current administration maintains or moves forward for the next 4 years and markets, don't do anything. They could also stay in depending on the outcome of the current impeachment and other things where they get reelected and markets go the opposite direction. I think it's important to note, though, with the presidential election, regardless of the outcome, it'll be a short-term outcome to the markets as well, in the sense that it's more of just we call it a geopolitical event. It's more of the market trying to understand or figure out what's going to happen because it's something that's uncertain.
Interesting. The job market remaining healthy, that's also a point. Can you talk about unemployment a little bit?
Yeah, absolutely. So the current unemployment remains strong. We're currently at a 3.5% number. That's a big number that we watch as far as economic stability in the country. 4% is really that number. If it goes beyond 4%, it's a number we start watching and get a little more concerned about. But again, the job market's been great. We expect it to be that way moving forward for the foreseeable future. And 3.5, like I said, is where we're at, and it's a great number to be at.
Well, those are some amazing nuggets of information that you just shared with us. And I think recapping a couple things will be helpful for our listeners. So remember, guys, a rising stock market, low unemployment, low inflation, and positive corporate earnings typically align with a growing economy and helps us as investors feel more confident in our money and that it's going to grow in the stock market. So remember, when stocks rise, people invested in the equity markets gain wealth. So Jonathan, now that you have shared the importance of research and ways to start investing and how the economy is doing, can you go ahead and share anything else with our listeners that they should be maybe looking out for?
Yeah, definitely. So one of them, which has been a hot topic the last several years, is the trade discussions with China. We had the first, phase one of the trade deal signed here just a few weeks ago. A big thing to watch is reviewed trade tensions in that category, or in that area, that we could see some increased volatility if the discussions don't continue to go well. Kind of in that same realm with China, their economy is another, global economy that we watch pretty closely. If their economic results for this year start to slow down more than anticipated, that could lead to some global concerns. And then I think another one is corporate earnings. Corporate earnings is a big metric we watch that drives the overall stock market and the performance of the stock market. If we see a decline in corporate earnings more than expected, that could cause, again, some increased volatility as well. And then I think the final thing that's important for people to pay attention to but don't get overly concerned are those geopolitical risks. A current one right now is the coronavirus. Right, that could have some economic impact due to spending and travel and different things like that. But we don't want it to be something that people get hung up on and think, we're going to enter a recession because of something that's happened in that area, or, for example, an election or something that's has a short-term effect.
Micro events.
Exactly. It could, like I said, it could increase or have short-term bouts of volatility. But long-term, we don't think it has major impacts to the overall performance.
Well, I'm sure a lot of our listeners have heard different things in the news about China or geopolitical risks, and I hope that you just gave them some insight and maybe some clarity around how important and impactful those events are when it comes to investing in the stock market. And thanks so much for your time today, Jonathan, and being willing to share some of those insights when it comes to investing for beginners. I hope that this episode was insightful for you when you're listening, guys, and make sure that you are tuning in each week. We release a new episode every Tuesday, and if you're not already, make sure that you're following on Instagram at Financially Free Journey and Twitter at Financially J for those daily tips and motivation to help you with your financially free journey. Until next time.